Have you been feeling stuck in cash, watching the market chop around and wondering if your edge even works anymore? If you have, then you're not alone. But guess what? No trend? No problem. In this episode, I'm going to show you how to stay confident, focused, and ready even when the market isn't playing nice. So let's dive in. Welcome back to the Traders Mindchat show. I'm Mike Lamothe, trading coach, author of the Trading Mindwheel, and somebody who spent 25 years helping traders like you sharpen their edge and master their mindset. Today's topic, it's a big one. How do you stay confident in sideways or choppy markets? I've been getting a lot of messages this week. Messages like, I'm mostly in cash. Am I doing something wrong? Messages like, my confidence is fading. I don't want to force trades, but I feel like I'm falling behind. Let me be clear. This phase right here, this is the test, right? And if you're navigating it with intention, you're already ahead of 90% of the traders out there. Because the ones who win long term aren't the ones who push every single day. They're the ones who protect capital, protect mindset, and show up sharp when the moment is right. So let's talk about why this type of market eats people alive, right? This kind of market right here. This is the kind of market that eats people alive. It's not just because of the overall lack of trades, it's the lack of feedback. You're not getting wins, your system looks flat, your journal starts to look empty, and suddenly the the voice creeps in. Maybe maybe I've lost it. But here's the thing. Confidence built on trading results, that kind of confidence is fragile. What we want is confidence that is built on process. I had a client, we'll call him Matt, had a great January, came into February hot, but the market shifted. His setups didn't trigger the same way. He started trying to force things. By the third week, he'd given back a third of his gains and was, as you might imagine, emotionally wrecked. So, when we started to unpack things, I asked him if you knew that the market was going to start to chop around like this, would you have taken those trades? And he said, no, but I didn't want to feel like I was doing nothing. And that right there, that's the trap. You don't get penalized for swinging, for not swinging. You get penalized for swinging at the wrong pitches. Have you guys heard of Ted Williams? You may have on prior episodes. This is Ted Williams. Ted Williams was a Hall of Fame baseball player. He hit close to 400. You can do the same. Here's how he hit 400. He figured out where his hot zones were on the plate. And he figured out where his cold zones were on the plate too. So anytime a ball would come into this section here that he would call his happy zone, those are the ones that he would swing at. Whenever it would fall over here, he would avoid those pitches completely. So how can we take that and apply it to trading? What we could start to do is figure out what trades are in our happy zone. How can we do that? The way that we could start to do that is to, just like how Ted did, start to come up with a definition of which ones are my high probability trades. What do those ones look like? Do they have a certain length, a certain depth, a certain quality to them? What market types do they tend to show up in? And For the rest of the time, we could just sit like he is right here with the bat on his shoulder. Why? Because in trading, there are no called strikes. We don't need to swing at something over here. We don't even need to swing at something that's, kind of sort of okay. We could just wait for the fat pitches. So that's how we could start to structure trading where we become confident in the process. So here's something else. Here's a framework that I teach inside my coaching groups, and it helps traders make clear, grounded decisions even when the market is kind of fuzzy. And when you're looking at the market and the market is behaving like this, it starts to become a little bit fuzzy. Why is it fuzzy here? The reason why it's fuzzy is because, well, the market dropped about 12% this week, started to rally, got an up day on the S&P 500 on Wednesday of 9.5%, and now it looks like maybe things are turning around, but they're still in this downtrend that started from February. So where are we at? We're in this choppy sideways market. So this framework that I'm going to show you now is a framework that helps a lot of the people that I coach inside of my different groups. So here's what I call it. I call it the three lenses of market readiness. And these three lenses make up what I call the market mood. So what are these three lenses? We've got the general market, your system, and your personal performance. The general market is, it could be what you define to put in there. For me, the way that I define the general market, I define that as the major indexes. I define that as the Nasdaq, the S&P 500, Russell 2000, New York Stock Exchange, and Dow. I like to look at all five of those, and I'll take a look at them across time frames too. I like to look at them on daily time frames, weekly time frames, monthly time frames. That way it's given me a forest, the trees, and individual leaves view of the market, so I could start to see when things are shifting and when the major shifts are happening. The question that we want to ask ourselves, though, whether you're looking at the indexes like I am or not, is the environment clean? Are things trending or are they not? As far as your system goes, is your strategy showing clear, actionable A plus setups? We have to have clear definitions of what those A plus setups are, right? If we just start labeling things without some sort of a rhyme or reason to it, then that's where a lot of confusion and subjectivity come into play, and those are the kinds of things that can knock us off balance. Then for yourself, your personal performance, are you are you focused? Are you emotionally clear? Are you mentally sharp? Those kinds of things play into personal performance too. When all three of these lenses line up, that is your green light. But even if one of these is flashing yellow, or if one of them is flashing red, that's a great time to pause. You can even rate them daily. That's what I like to do: green, yellow, and red. I do this with clients all the time, and it really does help to remove a lot of the guesswork. You don't need to be dialed into social media or the news or any of that stuff, because this kind of framework answers those kinds of questions for us and gives you all the clarity that you need. You might have, say, a green market, a green system, right? So coming back to this, you might have a green market, a green system, but let's say that you're personally tired, you're distracted, you're agitated. That's something where it might be a no-go, right? Especially if you're the type of trader that needs to be there, that's executing yourself manually. You don't have an automated process. We could talk about that. But if you're the one that's in the driver's seat, that would be a no-go, right? Because you're still the one that has to execute. And if you're not able to execute well, then you shouldn't be putting those trades on. On the flip side, let's say that the market's flat, the system's flat, but you're emotionally charged and ready to go. That's still a danger zone. Your goal should be alignment, right? So here's another example. There you could go for multiple day stretches where things are not aligned. For example, right now, the market is in what I would consider to be a red condition. Red condition being where we've got two of these that are both in the red zones. Right now, the market has been a chop fest, a volatility fest. The system is not showing me the type of trades that I'm looking for. I like to look for trades that are nice, tight, clean, have bases that are about 5 weeks long at a minimum. I'm not seeing any of that right now. So for me, I'm sitting on my hands in cash, even though my last trade was up 11% before I cashed it in. That was ALHC about a week ago. So the way to be ready for whatever the market throws at us is to maintain this kind of discipline. Here's the part that most traders miss. Being in cash doesn't mean that you're passive. It means that you're preparing. So a question that you might have is, well, what do we do while we wait? Right? So here's a few things that you can do while you are waiting. Number one is journaling. Not just trade journaling, but also emotional tracking. A prompt that you might want to try is, what am I feeling tempted to do today and why? Very good way to just start to track things, right? Another thing that you might track too, if you're tracking the market day to day, I highly recommend doing that. You might try to do something where you're just simply tracking which way the market is moving. Here's how I like to do it. I like to do it in the form of a spreadsheet. It's fairly simple, just tracking which way is the index moving, up, down, or sideways, and doing that for daily, weekly, and monthly timeframes, and doing that day by day. And that's something that takes me all of about 3 minutes or so to do each day. And all this keeps my finger on the pulse of the market. I'll also take a look at stuff like, well, how many distribution days are there? And I'm counting those up. How many stocks are making new highs versus new lows? Again, like all this stuff, like it just you could bake it into TradingView, and it's very easy to get these kind of statistics. And filling this out takes no time at all. How many trades are you seeing that you're actually going to put alerts on or put money into with a working order? How many trades are on your different lists? How are they performing? Those kind of things. Those are the kinds of things that really help me to keep my finger on the pulse of the market. And I call that market mood tracking, labeling each day based on red, yellow, green, breath, tracking that kind of stuff. Here's something else that you could do. You could start to develop your own model book. How are you going to know if a trade is coming right down the pipe or if it's low and outside? The way that you're going to be able to do that is coming up with your own model book. Here's a quick peek at my model book. So the way that I like to do it, it's actually pretty simple. I like to name the setup Then I'll take a look at, well, what time frame, what chart am I looking at? Am I looking at daily charts? Am I looking at weekly charts? How long should this thing be? How deep should it be? What does it generally look like? Where should it be in the trend? And also, what market type is required? And these are all things that the setup must have. If it doesn't have this minimum criteria, then I'm not going to be interested in it. And if when you're coming up with your model book, you want to have that stuff too, that minimum criteria, because that's how you're going to knock out 95% of the noise out there. Then you've got your setups that you're going to do a little bit more digging on. And when you're doing those, you're going to want to see, well, are there anything about it that takes it from good to great? And you're going to want to list out those qualities. And so I've got that here for myself as well. Then you'll want to go and find a few models of those. You could find 3, 5, 10. The more that you're able to do it, the better. And this kind of market environment lends to having the time to do those things. So you'll mark up the charts, mark them up yourself, take screenshots of these things, and annotate them. Annotate them so that way it's done by your hand. It's not just something that's in my book or William O'Neill's book or Mark Minervini's book or somebody else's book. It's actually you going and doing that work yourself. And in doing it yourself, that's how you're starting to train your eye. That's how you're starting to train your muscle memory. So that way, when you spot these things in real time, they'll jump out at you and you'll know. And you also have a way to go back and verify these things. Here's something else that you might want to learn about: progressive exposure. When the market does turn, don't go full size out of the gate. Scale in, let the market prove it. Here's how I like to do it, right? To go back to and start to use that 3 lenses of market readiness analogy that we used earlier with red, yellow, and green. Well, here's what I do in red, yellow, and green conditions. So what I'm going to do is, if it's a red condition and I'm just starting to get back into the market, maybe I find a quality setup, right? Because when things are in a red condition, most of the time you will maybe find just 1 or 2. I'm going to go in small. I'm going to go in with about 6.5% of trading capital. That's not a lot at all. And the most of it that I'll risk is just 0.5%, right? Oftentimes it ends up being less than 0.5%, but 0.5% maximum. That way, if I do put on 1 trade as a test or 2 trades as a test, I'm gonna lose what? Well, at the most 1% if the trade just completely bombs. That's a good test. That's a good way to start to get back in, put it in feelers. Then once I start to gain a little bit traction, let's say that those 1, 2 trades, they go well, great. Now I have some profits to play with. Then I'm going to take those profits, put them into the next trade, and then I'm starting to scale up. The next trades, right? Well, as we're moving into a yellow condition, I'm going to be doing 12.5% capital allocations maximum, right? So it might be a little bit less, but 12.5% max, that's where I'm capping it, and 1% risk of capital max per trade. So new trades go on. And again, I'm still kind of feeling it out. I'm starting to build a little bit of momentum here. I'm already playing with profits, and I'm able to scale up. Now, if those trades win, now I have even more profits to play with because the new trades were bigger. Great. Now I could go up to maximum size in the green condition where I would be putting at most, right? And I want to say that at most 25%. Oftentimes it'll be less. It'll be most of the time, it'll be, for me, it's been closer to about 20%, give or take. But at most, it could be 25% with 1.5% of capital being at risk per trade. And that, for me, that's where I cap it. Because if we just keep on going bigger and bigger and bigger, then it's just going to be, well, one false move and it'll wipe out everything. We don't want that. We want to continue to compound and, with large size, especially when the market is hot. And then when the market does start to turn, we will have mechanisms to start to scale back down very quickly. That's part of what keeps us close to equity curve highs and starts to limit those drawdowns. This is a fantastic framework. Screenshot this. All of this gives you a trading framework. The edge isn't just in your entries and in your exits, it's in your ability to wait. It's in your ability to prepare. It's in your ability to stay grounded. Remember, system stickers save equity. Stick to your process. Think you'll thank yourself later. So, before we wrap things up, I want to give you a few reflection questions to start to think about, or drop them in the comments if you're watching this live or even on replay later on. Number one, what color are your three lenses, right? This right here. What color would you say are your three lenses right now for the market, your system, and yourself? If you're gauging the market, what would it be? Would it be red, yellow, or green right now? How about for your system? What kind of setups are you seeing? Would that be red, yellow, or green? Are you seeing high quality stuff? Are you seeing, okay setups? Or are you seeing next to no setups? And how about your personal performance? What would you say about that? Here's another question. What's one thing that you've learned from not trading this week? You've got it already. Feel free to type it into the chat. And where are you still tying confidence to? Outcome or process? Go ahead, type into the chat, let me know. And if you have any questions about anything that we said, or that we could open up the floor now to additional questions if you got them. This phase of the market, it's not dead time, it's prep time, because when the fat pitch comes, you want to be in peak condition, not burned out on just chasing noise. If you're serious about building a real trading business, not just winging it, I've got a couple of resources that can help you. Number one is the Trading Success Blueprint. I will drop the link into the chat for you now. It is marawealth.com/blueprint, and it walks you through step by step building a business plan for your trading. It's crucial to have this. It helps review the things that we've spoken about today, cement them for yourself, and it gives you a working, breathing document when you're done with it. And you don't need to be an MBA in order to write a business plan for yourself. This is written for average Joes like us. And then if you want help crafting your own market readiness checklist or reviewing your edge, I do free one-on-one calls to help traders reset, refocus. I'll put the link to that in the chat as well. It's marawealth.com/one-on-one. So if you have any questions on any of that, or if you have questions on anything else, now's the time. I go live every week, same time every week, Fridays, 1 p.m. Eastern. with real, relevant insights that are based on what traders like you are facing right now. That's what brought this topic up. Conversations with real people. So if this episode helped, make sure that you're subscribed to this channel, whether you are watching it over on YouTube. I see a bunch of people watching over on YouTube. Whether you're over on X, if you're on Twitch or LinkedIn, Facebook, wherever you're watching, make sure that you are subscribed to the show. Turn on notifications so that you don't miss the next one. And until then, trade smart, be patient, and stick to your process. No trend? No problem. You've got this. Take care, much love, and as always, God bless.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.